Let's take it across to Deven Choksey. Deven, after a very, very long, quiet consolidation period, finally you're getting a little hopeful that maybe the market has some upside to it and a breakout is possible. We're up a good 287 points, almost nudging 25,100 on the Nifty futures. Where do you see leadership? What can take us higher?
Yeah, good afternoon and wish you very happy 16th.
Thank you.
Very happy to talk to you with somebody I think who is exactly yours my age. Good luck to all of you. Well, I think the market is already getting the leadership from some of the very strong companies like Reliance at this point of time. And one can well argue for some amount of unlocking of valuation happening in this particular company. That's where the market is possibly remaining completely resilient and supporting us. Apart from that, I think the banking stocks are showing reasonably good signs of giving further support to the market, and wouldn't be surprised if they end up giving between 15 to 20% appreciation from current levels in a course of around 12 to 15 months. So some of the leaderships are already established in the market. The dark horse in this entire situation could be at some point of time the commodities. If they start participating, probably I think they may run faster compared to many other sectors which are already quoting at a reasonable valuations at this point of time. And that could be a contra call as well, largely because of the fact that I think the demand for commodities expected to surge in following period hereafter.
Devan bhai, one thing has not changed is that in 16 years, every day we've spoken to you, always been bullish. Can I say that?
I know, Nikunj, I think that's now DNA problem.
But that is the spirit, right? I mean, in India, if you stayed bullish for last 16 years, you've been handsomely rewarded. I think what has worked is buy and hold. And we've had precipitous declines, Aisha. COVID, how can we forget it? You recovering from the heels of that great financial crisis in 2008. In 2009 is when we started. So there was genuine fear around equity as an asset class. Forget about structured products and forget about arbitrage funds. Then you had that crisis in 2012-13 taper tantrum, followed by what actually happened during the entire crisis in Europe, when there was a genuine fear of the European Union falling apart in 2015-16. But if you just had to put your hand on your heart and say, okay, this shall also pass, I think the markets have handsomely rewarded you. I'm not even getting into the list of stocks which are up 100 which are up 100 times. And there's a large list of stocks, an impressive list of stocks, which in a sense have really rewarded the benefit of conviction. So Devan bhai, in market, you don't make money by looking at yesterday's data. That is called as history. In market, you make money when you understand history and try and understand the future. Which are the next multi-baggers? They may not be 100x, but in next 5 to 7 years have potential to, let's say, be 5 to 7x. 5 years, 5x.
Yeah, I think a good point, and I think this is what something which we can keep on debating every single day. In fact, I think there is a formula going on in the organization that every single year, I think you should produce one company which becomes 10 to 15 times in next 10 years' time. And that much of patience you should have. So that's what I think we have been doing up till now with the grace of God. Well, I think currently the situation looks, I think, quite conducive to me for those companies which are typically, I think, a large integrated player for some of the larger OEMs. For example, in automobile sector, since I mentioned OEM in automobile sector, the companies which are basically providing a complete engineering and R&D services to this sector, they are the ones that you are going to be participating big time into this change environment which we are going to be experiencing. Already we have started experiencing at the beginning of this decade, and I think it's going to further accelerate as we progress towards the close of this decade. So I think the companies which are in engineering R&D space who are basically helping the OEMs, they could be the ones I think who could possibly give a significantly large amount of return. They could include, I think, the autonomous driving space, I think, as one part, but I think other parts are also there in this particular space. Similarly, I think we remain distinctly bullish about the prospects of housing going forward in the next 25 years. In fact, the city of Mumbai alone, I think, is talking about 30,000 redevelopments taking place in a span of around 10 to 12 years, 15 years. So if that kind of a development which is happening in a city like Mumbai, and for that matter, any other place in the country, we remain distinctly bullish about the housing as a space. And within that, I think we cannot forget the housing finance business, because 85 to 90% of the housing is purchased based on the finance. And that's where we see the continuous growth of 20-25% happening into the housing finance business. So yes, I think I don't know whether I think they'll give what kind of percentage return over a period of time, but going by the size, I think that they're likely to create, I wouldn't be wrong. I think generating 10 times from current price in some of the cases.
Yeah, that's a very, very interesting theme that Deven just highlighted, the redevelopment and the makeover of Mumbai. Um, Kunal, what is your own sense on how realty should be treated?
Yeah, I think many of the stocks have actually underperformed, frankly, Aisha. In fact, in the last 2-3 months, only we saw 1 week or maybe just 3-4 days where you saw the real estate stocks actually moving up higher. Post that, we've actually not seen these kind of stocks, going with the potential with these stocks have. We've seen real F at 150, 200. The stock went up to I think 900 or closer to 1,000. You saw Oberoi Realty at one point of time going into almost like a 3x, 4x returns. Godrej Properties, I remember, I think the stock was almost at 1100 or 900. 2-3 years back, that stock had given returns of 3x, 4x. So these stocks have capacity of going into multi-year uptrends, and that too on a very consistent basis. But right now they are just about showing signs of the first initial stage of building blocks of maybe what could come out as a much more bigger trend for the entire realty pack.
Deven, just like in last 15 years, the real outliers have been Bajaj Finance, Indigo, D-Mart, KI Industries, a long list. Which companies have the potential to become the outliers? It could be earnings, it could be P, it could be both. I mean, ideally it's both if you have to become a multi-bagger. But where do you see this sweet positioning of enviable growth and strong P bump up?
In fact, in each of these names which you mentioned, Nikunj, I think their position of outlier has happened largely because the way in which they executed their business. And I think that is very, very important going forward as well. Because if yesterday was competitive, today and tomorrow are going to be extraordinarily more competitive because of, I think, the surge of the technology along with. So, in my viewpoint, I think the companies which could possibly execute well are the ones I think which would be the winners of tomorrow. And I think some of the names I don't mind sharing with a complete disclosure though. That I think the companies like Tata Technology, companies like Bajaj Housing Finance, they are typically executing it very differently. And we like that proposition. The way in which I think these companies are executing their business, we find that I think they are creating a separate kind of a presence in the industry for themselves. And at the same time, I think trying to show a relatively different path to the competition. Should they end up taking up the larger pie, for example, I think if Tata Technology kind of company, out of the emerging addressable market of around $135 billion in next 3 to 5 years, if even they end up taking 1.5% of that market, I think probably they would be generating significant large amount of return. And same situation could happen with Bajaj Housing Finance kind of company. They have demonstrated a 30% CAGR growth in the AUM in Bajaj Finance. In Bajaj Housing Finance too, I think they are moving with the same kind of a growth rate with a high margin business from other three apart from the housing finance. So that's where I believe that I think their execution skills are completely different, maybe very much promising. And we find I think a lot happening in this area of activity from these kind of companies.
Where else in the current market can you take those outsized bets, or would you say wait it out?
Sorry.
No, I wanted to understand where else in this market are you scouting opportunities, or do you even identify opportunities? Or would you say wait it out, let some uncertainties on the geopolitical front or what's happening on tariffs, let that ease out first?
See, the uncertainties, the competitions, disruptions, they are all going to happen. I'm not saying they will not happen. Our eyes are typically in the area of renewables in particular. And within renewables, how the companies are going to be addressing a large problem of green hydrogen is something which we would like to, I think, very keenly watching out for. As of now, there is nothing on horizon that one can separately identify. But as we keep on looking around, I think there would be few opportunities as we see they are emerging over a period of time. That is one area which we like. Second thing which we definitely like out here is a complete logistic management activity in the country with rail, road, airport, and seaport completely coming under one fold with containerization, I think, which is speeding up so fast on the highways. I believe that I think this is one space which could possibly be a good space for many of the large scale annuity based investors like insurance companies, provident fund companies, which is emerging very, very strong with the high cash flow positions. And last but not the least, power and power utilities. We believe that some of the companies are executing their programs very well in power utilities and could potentially continue to run at the rate of around 20% CAGR over the next 5 to 10 years. So yes, I think there are opportunities in those companies. Whether I think we are completely sure with the names and the valuation at this stage, maybe it's a subjective question for a while for us.
Okay. What do you think runs the risk of underperforming? And I'm talking really long-term, forward-dated questions here. I mean, there are patches in the market, for example, where Infosys, when it peaked out in 2000, it gave you subpar returns for next 10 years. HUL, when it peaked out in 1994, 95, 10 years, it did not create wealth. What do you think runs the risk of giving returns which are lower than fixed deposit or government bond in next 5 years?
It's a very interesting question, Nikunjan. I think we keep on looking into the corporate balance sheet as to how they deploy their money. When we see that the balance sheets are not having enough amount of avenues to deploy money, that's the first signal that we get wherein I think we probably stay away from those companies. Would not be proper in my viewpoint at this point of time to name them on the screen. But frankly, I think the allocation policy of the company, they would possibly create either the performance or underperformance. In my viewpoint, I think still most of the corporate managements, they don't want to remain accountable to the allocation policy. And that's where one is little wary about their continued performance, even though in past they have performed handsomely. So that's an area where I think we are a little bit more concerned about. We keep our eyes on. And I think certainly those companies, they don't mean good to us from the return point of view. So we have to take gradual exit also from those companies without keeping much of the past at the back.
Take coming in right now on where is it that you're seeing those multi-baggers, and the last 16 years, Bajaj Finance, Ajanta Pharma, Astral, Uno Minda, Eicher Motors. Kunal, which ones?
No, it is not 61.8. It is
it's 618x.
Exactly. We are talking about a stock.
Kunal, which out of these names do you think will continue to be those multi-baggers? Astral, Uno Minda, there was Bajaj Finance, and there was one more stock. TVS.
Lots of multi-baggers actually. TVS should have gone up. In terms of market cap, I think the peak of the sell-off had come down to 5,000 crores. You look back in hindsight and say, "Ye kaise tha?" I mean, how come these things happen? But when fear happens of that magnitude, that's the time you need to get greedy.
Yeah, can we have that graphic again? So Kunal will have some reference point too. Yeah, there you go. KEI Industries, SRF, Naveen Fluorine, Aegis Logistics, TVS Motors, and the other one, the one before this, which had the top 5 movers, which had, of course, Bajaj Finance topping the charts there. There is, of course, TVS Motors. There you go. Ajanta Pharma, Astral, Uno Minda, and Eicher Motors.
Very tough to call, Aisha, that which could be the next out of these stocks, because I think all of them have done spectacularly well. The charts for these stocks, of course, are very, very attractive. Sure. I think we may probably expect Bajaj Finance to continue to perform, not in the same manner, but I think maybe come back into that kind of a strong 5-year, 10-year multi-bagger story.
No, they're compounders.
Compounders.
Yeah. Oh, absolutely. Deven, what do you believe leadership is going to look like, in the years to come? Because one has seen that it's now about M&M, Bharti, BEL. It's no more your ITC, L&T, Reliance, or for that matter, any IT names.
Consumption could be, I think, the one thing which probably will have to be looked at very seriously, because the way in which individuals are left with income in their hand, the way in which corporates are generating higher amount of profit in their books, I believe that both B2B side of the consumption and B2C side of the consumption game could possibly be the big time disruptor. In my viewpoint, I think the companies which are utilizing the ONDC platform, companies which are working with CBDCs, companies which are working with AI and IoTs are the ones I think who could possibly be a differentiator in this space. Now, whether they would produce the same magnitude of return which some of these companies have produced in the last 15, 16 years, it's a matter of time that we analyze that part of it, because I think on an ongoing basis we have to review this part. But we remain distinctly positive about the characteristics under which I think these companies will be producing return. And that's where I think our focus is on from selection point of view of the stock in the portfolio.
A minute 40 to go, and then let's look at the market today. And Kunal, it's turning out to be a very happy Friday. Thank God it's Friday. Was last time. This week it is why it's Friday.
Yeah, from a freaky Friday to a fabulous Friday, we can say.
Okay, so it's turning out to be a good Friday. So if we have gone past this key level, which is where we are right now, hopefully a gap up start on Monday, then what happens to the market? Are we looking at a swift and a rapid 2-3% move?
Yeah, I think we should be looking at a rapid 2-3% move, because this is like a 30-day consolidation which we are ending. And typically when such kind of consolidations they end, they have to come generally with a point where the markets move very, very quickly, very swiftly in the direction of the breakout.
Right. Okay, we're counting down. Sorry, Nikhil, you were saying something?
No, some news coming on Iran war, Aisha. I mean,
Yeah.
looks like there is no comeback
No
at least.
ceasefire,
Yeah,
at
no
least
ceasefire,
yet,
exactly. And you don't know whether US would, be part of the entire this entire war, because the comments in a sense are clearly that they are supporting Israel, but no decision in a sense has been taken whether they want to be an ally and be part of the war. So that in a sense is the biggest moving point over the weekend. But yeah, I mean, it's a good day. It's turning out to be a good week. And last 16 years, which is what we're celebrating today, have been nothing short of fabulous. So we started the show with a big thank you, and we have to end the show by saying another big thank you. We are truly, truly grateful to our viewers for supporting us in last 16 years. And just keep the faith. Buy and hold, I think, is a classic strategy which has worked. In moments of despair, if you did not panic and if you got greedy, I guess last 16 years have been really breathtaking for you in terms of returns. It's hard to, you could rub your eyes to see when you see in Bajaj Finance giving you 61 times return, or Astral Poly and TVS,
Ajanta Pharma and the likes, Eicher, TVS,
so
many of them.
That's India for you. Like they say, the best is yet to come. And for Etina also, best is yet to come. A baby was born 16 years ago, it started crawling, then started walking.
Almost an adult.
Almost an adult.
2 more years.
And they say the best is yet to come.
Oh yeah, absolutely. On that note, we're going to wind it up right here on this edition of Closing Trades. Thanks for watching.